In July, Japan's artificial intelligence hardware trade fell apart. Chip component makers were crushed, one of them losing 41% in 2 weeks. And yet, one chip stock went the other way, climbing 32%. It was the same market, the same fortnight, and almost the same industry. For clarity, figures in this video are rounded, and currency amounts are in Japanese yen, unless specified otherwise. Let us count down. At number 10, Shiseido rose 12%, and it jumped more than 4% on the final day of our window alone, in what looks like a rotation out of technology and into beaten-down consumer names. At number 9, Resona Holdings gained 13%, and the rise likely reflects the re-rating of Japanese lenders, as long-term government bond yields climbed to around 2.9%, a roughly 30-year high. At number 8, Chiba Bank rose 13%, and as a purely domestic regional lender, it sits right in the path of higher rates, which widen the margin banks earn on their loans. At number 7, Daiwa Securities added 13%, and as a broker rather than a lender, its gain probably owes less to loan margins and more to the rising market itself. At number 6, Bay Current gained 13%, and the consulting firm has been buying back its own shares hard, about 13 billion worth in June alone, though the July jump still looks like the same rotation lifting the rest of this list. At number 5, NEC climbed 14%, lifted on July 6 by a report that the government will set up a new bureau to promote defense exports, and by bargain hunters returning to technology names that had been sold off. At number 4, Mitsubishi Motors rose 15%, jumping more than 9% in one day after agreeing to build humanoid robots with a University of Tokyo startup and mass-produce 1,000 a month in Kyoto. At number 3, Mercari gained 17%, helped when SMBC Nikko raised its price target from 3,800 to 4,400, and the stock pushed to a new high for the year. Number 2, Ryohin Keikaku, the owner of Muji, surged 22% after lifting its full-year profit forecast to 98 billion from 89 billion, with quarterly profit up 54%. And at number 1, the stock that went the other way. SUMCO, up 32%. SUMCO makes silicon wafers, the polished discs that every computer chip is printed on. This was not an artificial intelligence story in the way the component makers were. It was a supply story. On July 9th, Micron announced up to $3 billion of investment in America's chip industry. Part of it was $500 million of financing for a Taiwanese wafer maker, Global Wafers, together with a 10-year agreement giving Micron access to its wafer capacity. Think about what that signals. One of the world's biggest memory companies just paid money to make sure it would not run short of wafers. The market read that as scarcity. The next session, SUMCO hit its daily trading limit, rising 15% and finishing as the single biggest gainer on the Tokyo prime market. And that was the second time in this window. SUMCO also hit its limit on July 1st, the very first trading day. So while Japan dumped anything exposed to artificial intelligence demand, it bought the company supplying the raw material underneath. On the other side of the leaderboard, Taiyo Yuden collapsed 41%. This was not a company in trouble. It was the market repricing a stock it had bid up beyond what earnings could justify. After a July 1st report that Meta would sell its spare artificial intelligence computing power. July 13th alone, it fell 19%. July's Nikkei was 2 markets. The artificial intelligence hardware trade broke, but the money did not leave Japan. It moved into banks, into consumer names, and into the companies selling the raw material the boom runs on. Like the video, subscribe to Global Market Series, and comment, did the artificial intelligence trade just crack, or is this a healthy pause? Thanks for watching, and see you in the next video.